Hey traders, this is Blake Morrow with Trader Summit, and it's been a long time since I've had Larry Tentarelli from Blue Chip Daily. It's good to see you, Larry. It's been a long time, and I'm so glad to have you here discussing the markets since we're breaking out. How are you? How are you doing, first of all?
Blake, hey, great to see you. Thank you for having me on. I really enjoy whenever we do these talks, and things are going well. Markets are breaking out, as you said, and things are looking pretty good.
So, how are you treating this breakout? There's been since it's been a while since you and I have had a discussion.
Right.
Um, first it's the Mag 7, then it's AI. We got a lot of big earnings. We're in a really important earnings season right now.
Yeah.
I just want to know where your head's at as far as where the markets are going and kind of what you're thinking.
So I've got a surprise for you. I'm long and I'm bullish. like
No
the
way.
like the other
Yeah.
8 times that we spoke. But no, we started to buy aggressively coming out of the lows in October, going into November. And I'm technically very bullish, and there's a couple reasons. So all the markets are breaking out. S&P 500, NASDAQ 100, even the Dow Jones Industrial Average, they all broke out over resistance and at new all-time highs. So as a technician, that's the most bullish thing that I can see, a breakout to new all-time highs, because what happens now is that prior resistance, and the S&P spent 2 years under the prior high. That prior resistance, once it's broken, it now becomes a support level. And there's a couple other reasons from a fundamental basis that I'm bullish. And the biggest reason is Jerome Powell came out, was it 2 months ago now? And he said that they're done raising interest rates. So whether they cut rates in March, which I don't expect, or if they cut rates in May or June, which I do expect, he's revealed their hand. So their next move is a rate cut, which is technically bullish or fundamentally bullish. Also, inflation's coming down. So it's not at their 2% target yet. PCE core last Friday came in at 2.9, but the month before it was 3.2. So 3.229. This month, the Cleveland Federal Reserve is forecasting 2.66 for January core PCE. So the bottom line, the trend for inflation is down. The trend for the Fed is going to be a cut, and the trend for markets is up. So based on those three things, I'm on.
So, Larry, I hate to be a thorn in your side here, but
No, let's.
what are you going to do about all the macro economists, because they're all bullish now, and so that's a problem for you. Just
I
saying.
just don't pay attention. My macroeconomist is my stock chart.
Hey,
So
no,
and
jokes aside, though, Larry, I
yeah.
hear what you're saying. The support and actually held. Even you look at the overnight moves in the S&P. As we got towards the low 4,800 levels, that held the breakout point. So obviously, it's very bullish right now.
Mhm.
But you did say one thing that does because I deal predominantly in currencies myself, and
Okay.
for me personally,
Mhm.
one of the things that, if you're talking about the Fed and you're talking about a rate cut, if there is a rate cut coming, and there's so many priced in for this year, what happens if, like what had happened yesterday, even though the next move may be they cut, perhaps,
Right.
how about if those expectations get pushed back to a point where maybe we only get one or two rate cuts this year versus 4 to 6, where the market has been at over the last month or two? Would that change your view fundamentally?
It depends what happens with the charts. I don't think so. And I'll tell you why. So I'm expecting the first rate cut May or June. I was never in the January camp. I haven't been in the March camp. And the reason is the economy's too strong right now. GDP is strong. Jobs are holding up well. Consumer confidence is very high. And inflation is still above their target. Make no mistake about it. They want to be 2% for the 12 month on core PCE. It's 2.9. That's still too high. And I think that the Fed is in a good spot because the economy is so strong. They don't have to be in a hurry to cut interest rates whatsoever. Now, Powell said yesterday, if for some reason the jobs market started to crack, that they could, they could move up their rate cuts. But I would actually welcome a cut later. Let's say it's May, let's say it's June, if that means jobs have held up and the economy's held up. So I don't think we need to rely on a rate cut. But I think what the key message the market's looking for was no more rate hikes.
Yeah, yeah. Well, they definitely got that. So, Larry, let's go back to the idea of, or maybe the conversation of what's performing well. I know you follow a lot of different sectors.
Oh yeah,
And that's like kind of your bread and butter. So,
yes,
based on your charts, and I'd love to see, and we'd love to see here at Trader Summit, what you're
sure.
looking at. What sectors look best to you, and what don't look so good? I mean, one of the big things that I've heard from a lot of macro analysts, if you will, at the end of last year,
Right,
is the Russell 2000 was just going to break out and leave everything in the dust, and it's actually been
right.
very much underperforming. So, why
Yes.
don't you show us, in your view, what you're looking at? We'd love to see it.
Okay, can we do screen share?
Absolutely, it's all yours.
Okay, I'm not the best with technology as we figured out earlier today, but okay, can you see my screen?
Yes, I can.
Okay, so I'm going to start somewhere different than where people might expect me to start. So I'm going to start in the industrial sector. So I'm just going to flash through some charts and you can stop me at any time, but I've got GE on the screen and GE is really a bellwether for the industrial sector, right? Today, Eaton Corporation reported earnings, $100 billion market cap in Ireland. And we can see the chart was already in an uptrend. Now it's breaking out after earnings. Parker Hannifin. And listen, Blake, these are not exciting. These are our nuts and bolts and industrials.
Show me
Parker
AI.
Hannifin.
We don't have AI here.
What's that?
Just kidding.
Oh, don't
I'm
worry. We're going to get
joking.
there. We're going to get there. You're going to remember that you asked. But Parker Hannifin breaking out, right?
Yes.
Train Technologies, also industrials, building materials breaking out. So here's what I see in the industrial sector. And this is a very important sector. This is not the Magnificent Seven. This is not, NVIDIA all day. These are nuts and bolts, core of the economy stocks. So we've got a ton of industrials. I look at Caterpillar because to me, Caterpillar is really the benchmark for the industrial sector. And what you see in these charts, they're in the upper right-hand corner. They're near new all-time highs and they're breaking out. So the industrial sector, very, very strong. If we move to financials, because that's obviously another important sector just to go through quickly. Visa, MasterCard breaking out, American Express, really big move after earnings. Financial sector, that broke out to a 52-week high. So we'll get to tech in a minute, but when I think about the nuts and bolts of the economy, I think about banks, I think about credit card companies, I think about what's happening with Caterpillar. And right now, these very, very important stocks are breaking out. So
Yeah.
that's two of your biggest sectors. There's 11 S&P 500 sectors. The financial sector is number 2. I think the industrial sector, it's down there. It's number 5 or 6. But you've got big breakouts. If we want to see what's happening with the consumer, and we look at consumer discretionary stocks, Marriott in travel, Hilton hotels in travel. So the consumer's been pretty strong as far as that goes. We take a look at the cruise lines, Royal Caribbean, a little bit of a shakeout today after earnings. Earnings can be choppy, but we can see it's in the upper right-hand corner.
Yep.
So when I look at these, core cyclical stocks, very strong. Home construction, builders first source, that looks like it's ready to break out. So when I'm trying to look at stock charts and let the stock charts be my economist, when I see industrials break out, credit cards break out, and travel stocks breaking out, that tells me that the underpinnings are pretty strong outside of tech, because we all know about tech, we all know about AI, and I've got a ton of charts we can look at there. But when I look at the core health, so Dow Industrials breaking
Yeah.
out another Dow. Go ahead.
No, I was going to say, in these moves, we've seen broad-based moves, right? And so
Yes.
when a lot of people start to think, okay, you got to watch Apple. Obviously, Apple's earnings. People are going to be watching this Apple after Apple's earnings tonight,
Right.
but people automatically think, oh, if Apple goes down, the rest of the market's going to go down. But that's not
Right.
necessarily true because you get a distribution, right? People might sell
Right.
Apple to buy uh, uh, ETN or MasterCard or whatever the case may be.
Sure.
All right.
Now, yeah, if they rotate, now I will say this though, and you bring up a great point. Earnings are super important, because we saw with Google yesterday, the market didn't like their earnings. The stock was down 7% or so. But when I see moves like that, because I'm holding Google, and I've had Google since lower, and I held Google through this 13% drawdown. But the market after earnings, it can be very short-sighted. So Google ran up into earnings. The market said, okay, you didn't put up astronomical numbers, so the stock pulls back into support. But I do think that Apple, very important what they report today, because they're tied to the consumer. And Apple is the stock that I always hold my breath for, because, Google has digital ads, Microsoft has cloud, and they're in different places. But to me, Apple really is that core consumer electronics stock, and I think it's number 2 now behind Microsoft in market cap. But
Yeah. Yeah.
I'm gonna
Surprisingly.
listen, Blake. I'm gonna tell you, and I'm gonna move you over so I can see you a little bit better here.
Oh, yeah.
But I hold my breath this time of the week, and I told my wife this last night. I said, 4 times a year we get this week where I basically don't come out of my office. When I do come out of my office, I'm very cranky. She tells me to go back in, and she's like, "What's wrong with you?" And I said, "Listen, the Federal Reserve, Google's earnings, so I do hold my breath when Apple reports earnings, and Meta and Amazon. So it is very important. As good as these charts look, there are factors that can override the charts. So I do want to see good earnings.
All right. Well, earnings are a big deal, as you pointed out. Sector rotation's a big deal. Tell me right now, since we're here at the Traders Summit, what are some of the best setups that you're seeing without giving away everything that you do with your company?
Yeah. Oh, we just went through a lot of them. I
Okay, so
love
those are the setups that you want to continue to stay long or
yes.
even get long.
Yeah, exactly.
Okay.
So on some of those charts that are broken out, like maybe a chart like Parker Hannifin, I don't like to buy, if I don't have a position, so I've got GE, but if I didn't have a position yet, and then the stock is up 6% today on earnings, if I was looking to buy that gap higher, I might buy half of a position. I wouldn't buy the whole position.
Okay.
But I think this group, whether it's here or on pullbacks, for those of your viewers that look at ETFs, this pay ETF, this is the infrastructure ETF. So it has those industrial charts that we looked at, and that looks like it's ready to break out right now. So my biggest position is in tech, right? And it is in artificial intelligence. So I've got advanced micro devices, and I've got NVIDIA, and I've got the cybersecurity stocks, so CrowdStrike, and all of these charts, Blake, right where they are, they set up just fine for me. CrowdStrike's pulled back a little bit, so we did a little bit of buying in there, but I use the 50-day moving average quite a bit. So when I see charts like this that are in confirmed uptrends, a little bit of a pullback over the 20-day moving average, these are the types of charts that I want to focus on. So another cybersecurity stock, these charts are set up very fine for me right where they are. Now, I do expect volatility around Apple's earnings and maybe around the Fed tomorrow, the jobs report tomorrow, the payrolls report. So if I do buying during a week like this, I do light buying, but overall these charts are set up pretty well. I mean, we could go anywhere
Yeah,
We
well,
could,
let me ask you this before and then we can wrap things up. You know,
yep,
you gave a lot to the bulls, and the bulls are,
yep,
you know, taking your charts and they're probably chewing on them because, you know, you pulled up a lot of even great sectors that I wasn't paying attention to. But
right,
if you're a bear, and this is something that anybody who's bullish should be paying attention to this part of the conversation as
sure,
well. If you're a
yeah.
bear, what looks more attractive, and if you were a bull, what would concern you as a bull?
Yeah, so that's a good question. And keep in mind, I always look at both sides. So just because I come on here and I've got a bunch of, charts in my back pocket and I'm long, I always look at both sides. So when I've got positions, I look to see if they start to weaken, if sectors start to weaken. So outside of the charts, there's five things that I'm focused on. And there's five things that I want to see these continue to go the right way. Earnings, the jobs market. So here's the thing. Earnings, for the most part, fairly well received. When we look at these industrial stocks breaking out and what have you, fairly well received. So the economy, it still needs to hold up. We've got, good GDP. But if for some reason economic data came in weak, right, then that's a problem.
Yeah.
And that could challenge some of these uptrends. Inflation, I want to see that continue to trend lower. Here's a big one, bond yields. And bond yields are doing exactly what I want them to do. So my view is that bond yields topped out right under 5%. They started to roll over. They bounced right into the 50-day moving average, right? And they pretty much failed at the 50-day. Now they're falling out of bed. So
Yeah.
bond yields yesterday, excuse me, were down 9 basis points yesterday, down another 8 basis points so far today. So bond yields are down 17 basis points in 2 days. That tells me that the bond market does not see the Fed hiking anymore, and it also sees inflation coming down. So I want to see bond yields stay under 4.2, and better yet, I'd like to see them stay under 4%. But those are, and then obviously the Fed is the fifth thing. But earnings need to hold up, the economy needs to hold up, jobs need to hold up, inflation needs to come down, and bond yields need to not break out. If we get all that, and that's the recipe that we do kind of have right now, then if we get all that, I think we're in good shape. And the charts are also set up well. But if there was a crack in any of those things, that I just mentioned, then it could challenge my view. I'm not a fan of small caps. So you mentioned that, and I know everyone is, loves the small caps. And I've heard about this big breakout move in the small caps for like the past 2 years now. But what happens with small caps is they run up maybe, 198, 205 or so, and then they give it back. And, for me, small caps are really just stuck. This is a range that goes back 2 years. The Russell 2000 is a very low quality index. I think, and I'm not an expert on the small caps, but I think about half of the index or so are unprofitable companies. There's a lot of lower volatility companies in here. I'm sorry, lower profitability, lower quality. And I do think that for small caps to really take off, the Fed has to actually cut interest rates, because the high interest rates, they do keep a lid on economic activity to a degree, right?
Yeah.
So these small cap companies that aren't very well capitalized, they're often very highly leveraged. They do get choked off when interest rates are high. But I think if Powell comes out and tomorrow and he says, okay, we are cutting 25 basis points right now, then I think the small caps probably take off. But until then, on the chart, I would need to see that chart break out over 210 would tell me, okay, we are off to the races. Until then, it's not a group for me.
Well, then I guess it's safe to say, Larry, that your company will retain its name, Blue Chip Daily versus Mid Cap Daily. So
Versus small cap daily.
all
Yeah,
right.
and listen, we've got some high octane stuff. I mean, we've got, some of these AI stocks that they don't fall into the blue chip category. But yeah, I like to see those uptrends.
Great. Well, Larry, I love your work. I love how you put it all together with the different sectors of the market and what really stands out to you. How do traders at the Trader Summit find out more about your work?
Two ways, and I appreciate you asking. So the easiest way to find me is my website is bluechipdaily.com. And then on Twitter, I'm also bluechipdaily.com. So I've kind of made it easy. If you type in Blue Chip Daily, you'll find me on Twitter. You'll find me on the website. We've got a 30-day free trial. So there's no obligation if people are interested and they want to see what we do on a daily basis, no charge. That's out there too.
Awesome. Well, Larry, I want to say thank you so much. I'm glad to have reconnected with you, and I'm going to look forward to having you more on the Trader Summit. And also, make sure you guys, get down below, register or sign up for, subscribe. Sorry, it's already late in the week, Larry. Subscribe to the YouTube channel down below. Give Larry a thumbs up, and if there's anything that catches your eye, jump down in the comments below and tell Larry what you're seeing out there. So, Larry, thank you so much for joining us here at Trader Summit, and I'll catch you hopefully very soon.
Blake, thank you so much. I really appreciate it.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.